Thanks so much for joining us. I'm Marlon Bowling with a look at our ag commodity trade. I am joined right now by Brian Hoops. He is with Midwest Market Solutions. He's based in Springfield, Missouri. Brian, we had USDA's numbers that came out yesterday with the planting progress. So corn planting is running ahead of schedule this year. Let's look at our corn futures and see how the market is performing. It's just kind of treading water, I guess you would say today. The May contract got down as low as 302 3/4. It is down a penny right now at 304.5 per bushel. And we have December corn currently a penny and a half higher. We're at 331. When you look at this corn market, and let's just say I'm a producer, I'm sitting on a bunch of cash corn from last year yet in the bin. What in the world kind of opportunities do you have to market that corn right now?
Right now, Marlon, there's really no marketing opportunity. We're at the contract lows. We are planting the new crop corn. We're going to have near record acres. We're planting at a near record fast pace, and that market has pushed to these lows. Now, from talking with some producers that are in that situation you described, they're at the point where they're just going to hold off and wait, and maybe we'll get some sort of a rally into the summer. Get hot and dry for a 2-week stretch. We could put on several cents in a really short period of time. We could see a pretty dramatic rally, and that would give you your marketing opportunity. But as it stands here on April the 28th, there's really not much of an opportunity to merchandise or sell corn. Those opportunities have come and passed.
And when you have the planning progress the way it is, running ahead of schedule, that kind of takes the wind out of the sails of any weather-related rally right now, too.
Yeah, right now the market has to be assuming that we are off to a really good start. Producers telling me the conditions are near ideal, almost in every area that they're planting right now. Very good soil conditions, very fast pace. We had similar pace in 2017. We had the the largest yield that we had ever in history. We're probably going to be looking at something like that again this year, unless we get some type of adverse summer growing conditions. Otherwise, I think we're bound just to continue to bleed and leak lower here over the next several weeks until we get into that heart of the growing season.
Now, the soybean planting is 8% done nationwide, which is about double the average, which is only 4%. But yet, they're still just getting started, comparatively speaking, to the corn. And you have the soybeans under a little pressure today. The May down 3 1/4 at 825 3/4, and November is unchanged at 840 1/4. What happened to all that talk about some potential big business coming on corn and soybeans from China?
Well, it's a bad time of the year for China to be buying any products from the United States. They have South American corn and soybean supplies they can buy at much cheaper price levels. I think if they're going to step in and buy from the U.S., it's going to be later in the growing season. Last year they had booked a lot of product and didn't actually take shipments until late August and September. And I think they may do that again this year, where even if they start booking some of this product, they have really no reason to take shipments at this time. And we won't see that show up until very late in this growing season. Our soybean pace is, well above where we should be anyway. This time of year, a lot of producers indicate they may be done with soybeans by this weekend if they have good weather this week. By next Monday, only 11% of the crop is done normally. I think we blow past that by next Monday's crop progress report.
Wow, okay. And just wanted to point out the wheat is just kind of flat in Chicago right now, with May up 1/4 cent at 521 1/4. Welcome back and talk more with Brian Hoops about our livestock trade right after this. Let's see what the equity markets are up to right now. Let's go take a look at the Dow futures. And on the June futures, we were up there several hundred points higher earlier today. And of course, this is earnings season. And apparently everything just kind of fell by the wayside here. We're barely higher at all, just up 16 points on the day, now up 25 at 24.024. The U.S. dollar index, we had noted where it had really sagged from yesterday. And it's still down a little bit. We're down 167 points right now at 99.930, still under par value, at least for the time being. A lot of interest also in the crude oil market, of course. And right now, it's down $1 again at $11.78 per barrel on the June futures contract. Got as low as $10.07 earlier today, so keep an eye on that one. As we look at our live cattle market, we have been trading higher today, and now all of a sudden it tripped and fell. We have June now going down 32 cents. We're at 83.72. That means we're $2.25 or so off our earlier high this morning. August now down 40 cents on the day. On the feeder cattle side, we now have the May contract 27 lower at 117.87, but the deferreds are still hanging on by their fingernails. They are a little higher. August is up 35 cents. Lean hogs, which were roaring higher earlier this morning, still are. Now we have June, July, and August, all expanded limit higher, $5.50 higher. So that's a little bit of a spread activity between the cattle and the hogs today, Brian. Let's talk about this. Why the difference?
You know, I think we are seeing a lot of intermarket spread activity taking place. The stock market has backed off of its highs, and that seemed to kind of take the edge off some of this cattle trade. But we're also seeing a lot of buying of summer month hogs and selling of the cattle market. I think the spread had gotten wide enough that some of the trade had finally decided to step in and do some buying in this market. And now we've got pretty much an onslaught of buying in the hog futures. Limit up yesterday and another limit up session today.
All right. Now, when you look at the way we continue to move ahead with these wholesale beef prices, the beef cutouts and the pork cutouts, we can take a look at the prices from yesterday afternoon, and then we'll get new updates coming up here in about a half an hour. Yesterday, just big-time gains. Choice cuts on the beef up $18.47 at $311.84. Selects up $19.76 at $298.78. And let's take a look at the pork cutouts as well, by the way. Carcass values yesterday gained $6.23 at $83.71. Loins are up $1.65. The ham market was up $9 yesterday at $58.42. That's a big percentage jump right there. And we had the bellies gaining $13.71 yesterday afternoon. They're up at $107.50. And one thing about it, I will note that I know I did get some meat on the way home yesterday, and they had signs all over the place, limit 1. So they are rationing everything right now.
Yeah, we're probably going to continue to see that. We're getting, I think, closer to the plants reopening. We're making steps in the safety of and health and safety of the workers and letting them back on their jobs. But it is going to take some time. I think we're making steps in the right direction. This will ease some of this pain that we have of these cattle and these hogs backing up and backlogging. So we've got the supply out there. We just have to work through it. It's going to take some time to do that, however.
That's true. Thank you, Brian, for talking with us. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. There you go, Christina.